New markets news: China and Hong Kong stocks fell on Monday, weighed down by the rising odds of fewer U.S. interest rate cuts and the widening U.S.-China yield gap. On there's a holiday in Japan made for thin trading on Monday, and the MSCI's broadest index of Asia shares outside Japan slid 1.6%. South Korean stocks eased with the political situation still in flux as a constitutional court hearing begins on Tuesday to decide whether impeached President Yoon Suk-yeol will be removed from office or if he will be reinstated. All the Shanghai Composite Index and the Hang Seng, as well as the Nikkei, have all been down today. In our U.S. markets, the hawkish jolt from U.S. jobs also raised the stakes in relation to consumer prices figures on Wednesday, where any rise in the core greater than a forecast of 0.2% would threaten to close the door on easing altogether. Markets have already scaled back expectations for Federal Reserve rate cuts to just 27 basis points for all of 2025, with the Fed now seen cutting to only around 4% compared to the 3% many had hoped for this time last year. Back home, the JSE was read across the board in mid-morning trade. The rand is currently trading at 19 rands 18 to the US dollar. It's at 23 rands 24 to the pound and at 19 rands 55 to the euro. A quick look at our commodities. Gold is trading at $2,685 and platinum is at $980 per ounce. The price of Brent crude oil is at $81.54 a barrel. Lindile Malchas is an investment strategist from ABSA and he's our market commentator for today. Lindile, welcome to On Point. Thank you so much for your time. It's Monday and we wake up to a rand weakening, and I take it that that has a lot to do with those jobs numbers in the U.S. on Friday. And also, if you could just give us your thoughts on the increasing price of oil and what could be driving that.
Yes, good afternoon, Liabu. And certainly we have seen the rand being particularly weak on the back of some of those numbers, but also owing to both local and global factors. On the local side, we have seen weakening growth within the local economy. So the latest GDP figures actually disappointing what markets had anticipated. And then on the global side, as you have mentioned, we have seen some of the data that has come from the US. Markets also scaling back on the amount of interest rate cuts that they are expecting this year, and also upping the expectations for inflation to remain above central bank targets. So all of that sort of coming back to the weaker rand. And then on the back of Brent crude oil prices, you are also seeing those ticking up slightly on the back of some uncertainty. And also we are seeing that the dollar does remain quite strong as well. So all of that fueling.
Should these numbers persist, especially these two, the rand and the oil price, of course, that would mean increasing prices of food and fuel. How do you see it at ABSA? What has been on your note?
Yes, so certainly if things do stay this way, where we are seeing a weaker rand and stronger Brent crude oil prices, that will ultimately affect the petrol price, and that is an input cost into various goods and services, so that will ultimately push up the prices of goods. On our side, we are still expecting the rand to strengthen. This is on the back of improved reforms from a government point of view. However, that is still stalled by the implementation of those reforms. So still a wait-and-see approach when it comes to the South African economy and what direction that the government will take, but quite a lot of optimism on some of the more recent political developments on that front as well.
Yeah. In general, how would you characterize the market in the market performance for this year? It's been just a few days, really, and today being one of those days where business has kind of like started to take hold. But how would you describe the market performance today? I did say in my intro earlier that the JSE opened with, it was quite red this morning, and maybe you could tell us what's driving that.
Yeah, so certainly it has been a jittery start to the year, and a lot of that also relating back to markets just being uncertain around global policy developments and also the scale of interest rate cuts to expect this year. So we have seen a rough start to the year for global markets across the board. And then locally, also seeing the JSE all shares starting the year on the back foot, and certainly today as well, we did see a weaker start. A lot of that today being driven by financials and industrials counters, those being the laggards, whilst we are seeing resources holding up slightly firmer on the back of stronger commodity prices as well. So that's been some of the drivers locally.
Yeah, I know that internationally we do have China GDP coming up. We also have the CPI from the US as well as the UK and the EU. Take us through what you think those numbers are likely to look like. But I know that later in this month we're expecting our own inflation figures and whether that could spur another interest rate cut going forward.
Yeah, so certainly on some of the key developments you are expecting this week, are expecting China to release their GDP figures. Markets are expecting a better outcome compared to the previous quarters, so to come in line with the Chinese government's 5% target. And then on the inflation front, we are seeing that markets are revising the inflation expectations slightly upwards. So markets are expecting inflation within the US to come in higher than the previous figure. So expecting it to come in around 2.8%. So ticking up from that figure. And then on the local side, we are currently expecting about 3 interest rate cuts this year from the SABC, expecting the first one at the end of this month as well. But from an inflation perspective, it does seem that inflation does remain relatively contained from a domestic price pressure point of view. However, a weaker rand does also play a factor within that.
Lindile, thank you so much for your time. I've been speaking to Lindile Malgas. He's an investment strategist from ABSA, and he was our market commentator for today. We're going to take another break. When we come back, I'll have more news for you.